Welcome to today's market update. I'm Maya Keynes, and joining me is financial expert Eli Sterling. Good morning, Eli.
Good morning, Maya. Great to be here.
Let's dive straight in. Several geopolitical developments dominated headlines overnight. The UK, Canada, and Australia have officially recognized a Palestinian state, a move that brings the total number of countries doing so to around 150. What kind of impact could this have on global markets?
This is symbolically huge, especially because it includes G7 nations for the first time. While the direct economic implications are limited, we're seeing some risk-off sentiment in defense and energy sectors. Israel has denounced the recognition, raising concerns over potential annexation of the West Bank. Investors are watching closely for any escalation in regional tensions, which could ripple into oil prices and defense stocks.
On the economic front, JP Morgan's Iyengar raised concerns over new H1B visa rules in the US, estimating a $14 billion tax on companies. How might this affect markets, especially Indian IT firms?
Absolutely. That $14 billion figure is significant, especially for Indian IT giants like TCS and Infosys, who rely heavily on US visas. We could see reduced hiring, increased offshoring, and a potential dip in remittances. But despite this, India's economy remains resilient, with strong GDP growth and upcoming consumption tax cuts. Plus, we're looking at a potential $20+ billion IPO market this year, so there's still optimism.
Turning to Asia, Trump and Xi are expected to meet next month, following a breakthrough on TikTok regulations. What does this mean for investor sentiment?
The thaw in US-China relations is a big positive. Markets responded favorably with a boost to the BOJ's easing stance, lifting Japanese equities. And Goldman Sachs raised their S&P 500 target to 6,800. Traders are also eyeing commodity plays. Iron ore and silver saw gains, suggesting broader risk appetite returning.
Now let's switch gears and talk crypto. We've got several pairs with interesting technical setups. Let's start with AVAX USDT on the daily chart using a Fibonacci retracement strategy. What's your read, Ellie?
Thanks, Maya. AVAX is currently holding above the 23.6% Fibonacci level at $32.93, which is a good sign. The price has been ranging between 0% and 23.6%, suggesting bullish strength. However, RSI is hovering just below overbought at 69.7, and stock RSI is deeply oversold. This mixed signal tells me traders should watch for a potential consolidation or breakout. My advice? Wait for a close above $35.71 before going long. That's key resistance.
Interesting. Now let's look at Sol USDT. Again, daily chart, this time with the Fibonacci retracement approach. Where do things stand here?
Sol is trading between the 61.8% and 50% Fibonacci levels, around $220 to $226. That's a deep retracement zone, and it's acting as support. But the momentum indicators tell a different story. MACD is bearish, and we had a sell signal on the 21st. Also, OBV dropped sharply, showing distribution. So even though the Fibonacci support looks solid, I'd be cautious. A break below $220 could send prices toward $210.
And finally, let's touch on BTC USDT, also on the daily chart with Fibonacci. Any clear signals emerging?
BTC is consolidating near the 61.8% Fibonacci level at around $112,614. It's a critical support zone. The golden cross is still intact, price above both the 50-day and 200-day SMAs, which keeps the long-term trend bullish. But short-term momentum is weakening. RSI is at 44, approaching oversold, and MACD just crossed below the signal line. If BTC holds the $112,000 level, we could see a bounce. A break below, however, opens the door to 103K support.
Eli, as we wrap up, what should traders and investors be watching tomorrow?
Keep an eye on U.S. core PCE data and Fed Chair Powell's remarks. Those will shape rate cut expectations. Also, monitor any updates from the Trump-Xi meeting and developments in the Middle East. In crypto, watch BTC's reaction at 112K and whether SOL can hold $220. And don't forget earnings from major tech firms. They could sway sentiment across both equity and digital asset markets.
Thank you, Eli. That's all for today. Stay tuned for more updates, and we'll see you back here tomorrow.